All right, hey, ladies and gentlemen. All right, welcome to Portfolio Cashflow on Fridays. All right, with TT over here. All right, I'm possible Terence. Now let's get our session started. And today we have an up market day. All right, now is it a day of a dead cat bounce? Is this really big rally that we want to see after the major sell-off? I don't know. Right, but we'll go to the markets, we'll have a look at the charts, and then we'll see, all right, which is the more probable or the more likely direction. Right, and after that, we will go and look into our portfolio. All right, yes, the live portfolio that we have built together with all of you. All right, let's look into our current positions and let's see if we need to worry about anything at all. Right, I know many of you are, right, but stay tuned to the session, right, and I'll guide you through, right, all the positions that we have right now. Okay, all right, now, so ladies and gentlemen, if you are live with me right now, do drop a note, do drop a comment, say hi. All right, so I know who's with me this week over here. Right, as the market, all right, has ripped many people out of their confidence. All right, hey Anthony, good to have you back over here. All right, and I mean no joke over here, ladies and gentlemen. All right, the market has just ripped a lot of traders out of their confidence, right, this week. Why? Why am I saying that? Because, right, for any traders who didn't give up, all right, amidst the last sell-off, right, and they held their stocks, right, despite having losses, they were hoping for a break even, they were hoping for a recovery, or maybe even some profits, right? But with this slam off over here, right, and more importantly, what the Fed chief has actually announced at Jackson Hole, right, it is actually all's not well for the market. All right, now I'll detail later on once I start the session, right, why all's not well for the market, right? So if you are still one of those hit and hope, all right, or you are still buying, all right, and hoping right now, right, there is some actions you really need to take, okay? All right, I've been nagging at this for a really long time. If you haven't, right, you are already late, right, but you need to spot your chances to take some actions now. Right now, so hi, Mike, all right, and yes, Facebook user, all right, because you made an error in what you type, right, it might be very obvious that it's going to be you. All right, now, so do go to the banner. Sorry, do see our banner. Right, do see my banner over here, streamyard.com/Facebook. All right, please go over there. Yeah, all right, and yes, oh, Jimmy, all right, welcome back. All right, now, so yes, do go to streamyard.com/Facebook. All right, and you'll be brought to a pop-up page. All right, click on the button, just approve your profile so you'll know who's leaving comments, okay? All right, now, thank you very much. And let me remove the banner so I can start the session officially. All right, now, so yes, a disclaimer, right? I will be discussing my live trades that I will think about putting in my portfolio. I will be talking about trades I already have, right? But by no means are these for any form of recommendations to trade, right? Whatever I've done, all right? All forms of trading bears a risk of loss. So you need to be aware of all the risk involved, right? Before actually deciding if you want to follow suit, okay? All right, now that is out of the way. All right, let's get to our usual start. All right, we'll go to the markets, okay? All right, so let me pull out the platform with the charts, all right, and we'll look at the markets together. All right, so this is the usual, ladies and gentlemen. All right, I'm showing you the SPY. All right, now the SPY is actually the S&P 500 ETF shares. All right, now and looky where we are. All right, now I did say last week, all right, when we take this level off, all right, we will see it bounce all the way to the next support, which is 3950, all right, or 395. All right, we hit there yesterday, right, and we had that bounce, right? So market was selling off yesterday and then it went up, right, to close. That is actually a good sign, all right? Let me actually tell you what I mean over here, right? Any day right now, if the market actually opens down and then reverses, right, that's a much better reversal sign, all right, than a market that's actually opening up, right, and then charging higher, right? That's not as good for a bounce, right, that is actually sustainable, right? So today is actually not one of those good days. Yeah, right. So the market opens strong, but now all that is left to be seen, all right, is if this market is going to close strong, because this is the end of the week, all right? It's the end of the week, so you'll see over here, all right, how it wants to end, all right? But for right now, we definitely have a strong-looking market, all right? And, all right, I also want to say this, all right, in today's market over here, but is it analyzed? No, it's not analyzed. Market watch, yes. All right, now, so if I go to market watch, I go to index, all right, and I pull out the S&P 100 index. You can see, right? We have 93 stocks out of the S&P 100 that is up, right? So it's very clear there is a correlation day, all right? Today is a day where a lot of stocks are up, all right? So we got a good chance that it's going to end up positive. Yeah, all right. The players or the short-term traders are going to be bullish on intraday perspective, right? Unless they have a better reason not to, right? Now, so let me get to Jackson Hole, right? And why it was so important in terms of the comments that Powell actually said. Now, Powell literally crushed all the hopes that the market had. Why? Right? Because, right, over here, right? Because over here, this rally, right? This rally over here was led by a drop, right, in the CPI number that actually came out, right? The market expected 10, right, but the CPI reported 8.9 or something like that. So the market took that one stream event, right, a one-time event, right, and started saying or started distributing, oh, you know, the numbers came down, right? The Fed may actually think about pausing, right, rising interest rates for a while, right? Okay, up until Jackson Hole. Why? Because this time, right, Powell wasn't hiding anymore, right? He actually came out right in front and said inflation is out of control. That's the one, you know, stumbling block. Number two, right? They say they're going to do whatever it takes, right, to bring it back down, right? That's the second one. Right, and then the third one is this. He never gave a deadline of when they're going to stop rising interest rates. Right, and one thing you should know is market always hates uncertainty. So now the market doesn't have a deadline, right, of when it's going to stop raising interest rates. So can you see the trend now? Yeah, right. Whatever that was still hopeful, right, any traders that were still hopeful, right, have lost all hope right now. Right, so all is not good for this market. But having said that, right, although all is not good, markets do not go down in one straight line. Why? Because the profits are there, right? The profits are there, right? So we're going to see this sell-off. We're going to see a bounce, right? Will today be the bounce? I don't know, right? Okay, it may take another few more days or this support before we get that, you know, really extreme bounce. I don't know. Yeah, okay, we'll see, right? But there will be a bounce, right, before we resume the next sell-off and probably get ourselves to a new low. Yeah, okay, and all this is setting up, right, for September, right? This is how I see it, all right? Take whatever I say with a pinch of salt. Do your own analysis, but I see September and October, right, leaning towards being bearish, all right? Why? Because everybody would like to have the year-end rally, right? But for the year-end rally to come, whether it's a day cap bounce or it's a real rally, right, okay, that will depend on what September and October does. Because if we rally into September, October, it will make the market harder, right, for it to push any higher amidst the higher interest rates. But, okay, if we have that collapse, right, then it actually makes it easier, right, to have a better end of the year rally over here, right? So that's just common sense logic. That's just experience after being in the market for a long time, right? And that's what I expect will pretty much, sorry, that's what I expect. All right, pardon me. All right, now that's what I expect the market will probably do. Okay, now, so that's our, that's basically my expectations. All right, for now, let's go to our portfolio, shall we? All right, now, so nothing to scream about or nothing to really shout about when it comes to our portfolio. Why? We're stuck, and we're still stuck. All right, am I worried? I'll tell you no. All right, now, so number one, all right, we have a WBA position, all right, and we hold it at 45, all right? So where's WBA right now? It's at 35. Am I down? Yes, I'm down. Right? Am I having paper losses? Yes, I'm having paper losses. Terence, are you panicking? No, I'm not. Right? So why am I not over here? Right? If you look at what the stock, what the market has done to this stock, right? Okay, not that I like it, yeah, okay, but I'm not fearing it. Okay, number one, right? Before you buy any stocks, you need to know what you're buying. Right? So number one, I admit that was a bit early. All right, okay, but number two, nobody would know that they're going to be fined because of their opioid scandal involvement, right? That added more negativity, right? But the company has already taken so much negativity, right? One last one would have hurt it. Yeah, okay, why? Because this company is still trading at 5.7 PE. All right, now how many companies in the market now can you actually find that is trading at 6 times or less of its earnings? And not just 6 times of the earnings, right? 6 times or less of a company that consistently made money for more than 10, 20, 30 years. That's what you want to know, right? And second, if you buy this stock right now, it actually pays you a 5% dividend return, right? So no matter how you look at the different fronts, right? If I haven't had a position right now, right, I would still consider getting myself into this company. Why? Because of its business, right? It runs pharmacy outlets, right? It doesn't do anything spectacular, but it's a cash gushing, is a cash flowing portfolio, company, right? So I don't really have to worry about it at all, right? Why? Because I've seen these companies in and out, right? And it is stable yet cyclical. Why? Because when managements do not do so good decisions, right, their stocks will come down, right? And then when they switch managements around and then they do better, right, then they're going to perform better as well, right? Why? Because this stock, Cardinal Health, and CVS Caremark, right, they are all behaving the same way. Yeah, it's like a rotation sport that they're playing over here. All right, now, so I'll leave it to you in terms of how you want to play it, right? But I need to tell you, right, that I'm not getting out of this position. Why? Because the fundamentals behind the stock has not changed yet. All right. So if you know how we build a portfolio, right, if the fundamentals do not change, right, I'm not worried at all. Right. And while I'm still waiting, right, I'm actually collecting 48 cents every quarter. Right. So I'm fine with that. All right. Now, of course, the next one over here, similar situation, Intel. Right. Now, the first thing I need to worry about or think about is this. Will I ever see Intel being outside of laptops, being outside of processors? No, I don't. All right, are they still dominating 70, 80% of all the processors? Yes, they are. All right, they may not have the hottest one, but they have all the utility-based ones. All right, and how does a company make money? Do you make money by just one latest, hottest model? No. Right, if not, Toyota or Honda would just build one car model. They don't. They build a whole variety. Why? To suit different clienteles. All right, and that's where Intel is actually strong at. They don't need the one best chip, right? But they need a lot of different chip to suit different customer clienteles, right? And that's where they're strong at. Yeah. All right. Now, so I don't have to worry about Intel's profitability. Right now, of course, we all know that the chip sector, right, is suffering right now because of inflation and the demand's going down, right, from a peak. That's okay, right? It's not something that Intel has not seen, right? And being the biggest, right, they actually have the financial power, so it's a good thing after all. Yeah, all right, now, so 6.9 PE, not worried at all. Right now, so our first two stock positions, we're holding it. All right, so let's discuss the third stock position before we go into options, shall we? All right, now, so our third stock position is VZ, right, and it's now at $42. All right, it's paying a 6% dividend yield. It trades at 8 times PE. Right, am I worried? Right, I'm assigned the stock at what? $50. All right, I'm not. Okay, why am I not again? All right, it's a telco. All right, do people still need telephone lines? Yes, they do. Yeah, all right, now, so it's a cash flowing business. All right, and if the market sells off, right, money needs to hide, and money usually hides in these companies like Verizon Wireless. So I'm not too worried about that. All right, now, so our next one, all right, ANF. This expires 2 weeks from now, and we have an $18 puts. Let's have a look. Has the market punished ANF? Yes, it has. All right, so the market took out a lot of companies over here. Yes, all right, in the last 1 week, all right, we had this day sell-off over here to a low of $14. But look, ladies and gentlemen, when a company is cheap, all right, and when you have a market rebounding, look at what the stock did yesterday. All right, it erased in 1 day, it erased 2 days, all right, of the sell-off. Right, that's a very, very bullish move over here. Yeah, okay, so we may see a bottom, all right, if we can follow through, right, with today on a second update. All right, so once again, I'm not worried about this stock. All right, yes, with the lowered earnings, all right, we are now trading at 12 PE, all right, but I'm not too worried about this stock yet. It's been beaten down. It's really, really dirt cheap over here, right? So I'm going to hang on, right, like what I did, right, with Gap, all right? So I'm going to do a Gap on ANF over here, right? And with a book value right now of 15.59, I'm really not too worried. Yeah, I think we're sitting fine, yeah? Okay, now, so I'll hold this until expiry. So if I need to, I'll probably end up taking another assignment, but we'll see, yeah? Okay, now, so our next position is AT&T, right? We have a 16 September as well, $18 puts for 41 cents. All right, AT&T, close enough, right? No real danger, right? So the market sold off, right? But this stock, right, is still holding firm, right? We're at 17.50, right? About 50 cents in the money, right? So I'm not too worried. There we go, right? The options cost about 60 cents right now, right? And we collected 41. So I'm not too much under the water. So I'm pretty much fine. All right, look, our next one, KSS. On the hindsight, I should have probably closed this position last week. Should I? Yeah, all right. But there's no such thing as hindsight, right? All right. We simply manage. All right. So look today. Whoa. I was just about to say, and hindsight brought me back in. All right. Now, so hindsight brought me back into play. We have a 16 September $30 puts. We have $2, all right, in the back. Let's have a look. $30 puts. I can close it. Right? Yes. Look. I can close it today. Right? By paying what? About 145. Whoa. Let's have a look. 145. Yes, I can. Should I? Should I not? Nah, I'm staying put. Okay, I'm staying put on this stock. All right, now, if many of you didn't notice, all right, one reason why I'm staying put is this. All right, now, if I'm going to close this position today, right, there's going to be a lot of slippage, right, between the bid and ask price. That simply means if I close it, right, okay, I'm probably going to shortchange myself by overpaying, right, to get the order filled. So that's one downside. Second, right, I'm more than happy to reload this position, right, okay, but if I reload it 1 month later, right, and you'll see the next problem, right, it's 133, 165. So I'm going to end up shortchanging myself again, right, trying to get back in, right? So this is where the market is not very certain, right, of the big jump today. Look, it jumped almost 9%, right? So the market makers are simply pulling the bid and ask apart. Why? Simple, because if you were the market maker, you were quoting prices, and then you see your stock, right, suddenly making a big jump, right? What will you do? You lose confidence, right? You're not too sure how you should position yourself. So the only way to protect yourself is to make the prices much wider, right? So if anybody wants to get something filled, right, you have that big buffer, right, to try to protect yourself, right? And this is what the market makers think. So many of you are thinking, Terence, how come, right, option premiums will tend to pull away? It is always because the stock have made a big unexpected move. All right. So imagine if you're the house, what are you going to do? If you have a big roller coming in, right, first, you're going to try to avoid him. You're not going to let him play. Second, all right, okay, now you're going to try to protect yourself as much as you can. So the only way they can protect themselves is the buy and sell prices, called the bid and ask. So that's why they maneuver. Okay, I can't use this word, it's too harsh, right? Self-preservation, right? They do this as a form of self-preservation. Yeah, all right. So if you don't need it, right, don't need it, don't close it. Yeah, all right. So we'll hold on to this, right, and then we'll see what we can get back on. Yeah, all right. Okay, so no actions on this. Right. So yes, one thing is because of the stocks plunging up and down, right, and never really settling. So the implied volatility is pretty high, right? But I'm not looking at that, or I'm not caring too much about that. What I'm caring about is the wide bid-ask prices. Yeah. All right. Now, so yes, on the 6th of September, it pays 50 cents in dividends. That's okay, right? Because that's still another 10 more days before our options expire. So it doesn't really affect too much. Yep. All right. And now we're sitting fine. Look, stock is going higher. So this is actually bullish if you look at it. Yeah. All right. Okay. Now, for those of you who reads charts over here, we're close enough to the support level, and this is a very, very strong bounce. All right. So who knows? All right. We may actually end up making all of those profits for this month. All right. So we'll hang on. All right. We'll hang on for another week, and then we'll come back and have a look. All right, now next position, KSS. This one onwards is mostly for October. All right, so let's have a look. TSN 7750. Whoa, another bad week. All right, so not much to talk about. All right, we just hold it. All right, first, will people eat less meat? Not really. All right, second, all right, 7 PE, not a worry. Yeah, all right, so I don't have anything to worry about for this one. All right, now next one over here, gold. All right, our position on gold, we have a 15 put again for October. So nothing to worry too much about. All right, but let's have a look at it. All right, didn't add it here. Let's do it this week. All right, so gold has been sold off, all right, because of the stronger dollar. All right, so if dollar stays strong, all right, it'll put a lot of pressure on gold prices. Yeah, all right. So gold over here, which is Barak Gold, a company, right, dealing in gold, right, we'll see stock price being depressed. All right, okay, now, so today we have the bounce, so that's a good thing over here. All right, now, so I'm holding on to this, so nothing to scream or shout about. All right, and next one, Haynes Brands, a $9 puts for 21st October. All right, so HBI. Yeah. Right, this is what I really want to show all of you about. All right, now, so yes, markets can sell off. All right, okay, but when you're getting in on what we call really, really depressed valuation stocks, right, they won't really, scare you as much. Yeah, okay, now when I say they won't scare you as much, all right, I'm talking about, if you had to compare like stocks like Apple, right, because Apple started the week at 170, right, and then it fell all the way to 150 over here. So the magnitude of it, all right, will scare many investors off. All right, now, and if you compare to what we saw with HBI, right now, so HBI, right, started at what? 951, right? And it went to a low of 850. Yeah, it dropped by $1. Oh my goodness, it dropped by $1. All right, pardon the sarcasm, but you get what I'm trying to drive at. Yeah, okay, so there's a reason why we only choose to get ourselves into severely depressed counters, right, amidst this kind of market environments, right? Because they're just waiting for a bounce. They're just waiting for one good reason, right, to stage a good day, right? Okay, that's what they're waiting for. Right now, so nothing for HBI, right? If you're totally worried over here, let's just have a look. The premiums, how much is it? 70 cents? We collected 44. No, we collected 49, and it's what? 70 cents. That's okay. Nothing you really panic about. And the last one we put in, right? The PFE, 16 September 45. Let's look. Right? Where's PFE? Oh man. PFE is here. Look. We're still above our strike. 45. 42. 42. Oh, we're still profitable. Right? Not too much, but we're still profitable. And look at what the stock did. It literally fell the whole week until yesterday. Right? But look at the rebound yesterday. Right? One day erased 3 days of a downsell. So this is why I don't worry when I'm dealing with severely undervalued stocks. Right? One good day will erase many bad days of this move. That's it. That's how they work. Right now, and that's really how the markets work. So if you know what you're doing, right, then you won't really be panicking. So for now, I'm sitting and waiting. Right, this week you're sitting and waiting. Right, on the hindsight, okay, if you look at all this, these 3 stocks I reallocated last Friday. If you were asking for hindsight, I would have been better off if I established these trades today. Yeah, because you saw the premiums are higher. I could have collected more, or I could have picked a better put strike to sell, which makes it safer. Right? But there's no such thing as hindsight over here. Right? We do what we have to do. So this portfolio has a target. The target is to achieve close enough. Okay, I cannot say close enough. The target is to achieve $2,000 per month, right, on our capital, right, or a 2% return. Right? So we were gunning for that, right? And that led us to reallocate last week. And I did it. Did I regret it? No. Right? Did I hope that it would have been better? Yes, of course. All right. Okay, but hope is definitely not a strategy. Right? So we allocate, right? And then after that, we manage. So that's why it's always very important, right, on how you pick your stocks. Right? You need to be comfortable with your stocks, because when you're not comfortable at these kind of moments, that's when you're fearing, that's when you're panicking, and that's where all the bad decisions are made. Right? Because let me just ask you this question. Right now, if all of you right, if all of you were looking at TSN, yeah, okay, let me stretch it out. Right, if all of you were looking at TSN over here and you're seeing this, all right, oh my goodness, the stock fell from $80 to 75. It fell $5, right, in a week, $5 in a week. All right, now, can you honestly leave a comment right now and please tell me how all of you feel, right, if you see a stock doing this for the whole of last week? I know I'm lagging, all right, but am I lagging so badly, or is nobody just gonna give me any comments, any response today? I feel so lonely. Oh man, cannot sleep, Susan. Thank you very much. All right, now how about the others? For TSM, Mike, for TSM, not too worried. I don't know. TSN, you mean? I'm looking at TSN. Susan, no one eat. Then shouldn't you be eating more chicken? Go to KFC. All right, now, so yeah, if you know the company well enough, then you're not really panicking. But if you're out there, right, if you're out there choosing stocks, then you have a lot of reason. You have a lot of reason to worry about. Yeah, okay, why? Because there are many chip stocks, right? Okay, that means there are many semiconductor chip stocks, right? They are deeply undervalued. But Nvidia is definitely not one of them. All right, and look at what Nvidia did, right? Just last week alone, 178, right, down to 130. That is a trashing, right? Now, why are they being trashed? Very simple. They're still trading at a 45 times PE after being trashed. Can you see where I'm getting at? Yeah, okay. Now, how about the difference, right, with Micron? Right, Micron is also a cheap company, right? But the difference is it already trades at a 6 PE, right? Now, so if we look at the magnitude over here, market is moving too fast. The chart doesn't want to load. Right, what did Micron do? Looky look, all right, 61 to what? 56. All right, 61 to 56. All right, now is it dropping? Yes, it is. But the magnitude of the drop is definitely much lower and much smaller, right, than what we see on the video. All right, so once again, all right, just a gentle, it cannot be a gentle reminder anymore. It should be what we call a last reminder, right? Your last gaps effort, right? If you're still holding on to many, many high multiple stocks, right? Any stocks in your portfolio, right? If they're still very, very high multiples, right? You need to start thinking about what to do with them, right? Why? Because when the market is in mood to smack people, all right, okay, it will smack people until the valuations actually make sense. Why? Because if the valuations doesn't make sense, no fund managers will dare to come in when the environment is so bad and so terrible, right? Because they will not feel protected. In a down market, right, okay, these fund managers have to allocate, but they're not dumb, right? So they're going to allocate in the safest possible way, which means stocks that have already been beaten, right, and beaten down badly. Yeah, okay, so that's what you need to think about, right? So if you're still trading companies, right, like Nvidia, right, is it already cheap, Terence? My answer to you is no, right, because it's still trading at a 45 times PE, right? Now, so I know another red hot stock is Taiwan Semiconductors. Is it cheap? To me, it's not, right? 16 times PE amidst inflation, right, amidst logistics issues, right, and many, many others, right? Higher wage cost, right? You go name it out, right? Are they going to outperform, right, 16% on their profits, right? Because that's what they need to continue to do, right? And Nvidia is already failing, right? So if Nvidia is failing, right, Micron is failing, right, Intel is failing, everybody's reporting lower numbers. You think TSM is going to stay up? All right, okay, now. I'm nothing with this stock, all right, okay? It has, outperformed my expectations, but, okay, 100 times PE. If you want to pay for it, go ahead. All right, 100 times PE. Are you sure you want to pay for it? Why? Because they're running out of ideas. What are they doing now? They're raising prices for their built-ins. Why are they raising prices for their built-ins? To try to bring in more profits, because they realize that their cars, right, are already selling. All right, and now once they have a certain percentage of market share, it actually gets harder to continue to sell more. Right? How many of you actually realize that? All right, that this is what's happening to Tesla right now. All right, Hoy. All right, now I'll leave it to you. All right, whichever way you like. All right, for me, I'm just using the ones on the platform. Yeah. Okay. Now, so my problem and my beef with Tesla right now is this: they're charging more for whatever that's running inside your car. right? That means they're charging more for all the use of the facilities, use of the functions, and blah, 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 right? Because they're trying to do that, right, to bring in more profits for the company. But instead of selling more cars, why? Why do you think they changed that strategy? There's probably a good reason for that. Yeah, okay. And, all right, I don't know if you pay attention to this, right? Was Tesla, right? Let's just associate, in this region, right? Let's talk about Singapore. Yeah, right. Singapore in general, okay. Now, was Tesla the biggest selling car, right? Biggest selling electric cars in Singapore? Does anybody know? Or was it someone else? Man. BYD, yes, Desmond, thank you very much. All right, surprise, surprise, looky look. All right, it was actually BYD that took the #1 spot. All right, now, so, there are more Teslas than on the road, Susan. I don't deny that. But the problem is this, right? With such growth numbers of 100 times PE, right? They have to size up. They have to outperform, right? Okay, if you compare this to BYD, I don't know what the prices are, right? Okay, but, what I'm trying to tell you is this, right? They have to outperform, right? And that's a very, very difficult problem over here, right? Against what? Right? Against the fact that you can actually buy Toyota Motors as well, right? And Toyota Motors is trading at a 10 PE, and they are consistently making money. So you are spoiled for choice if you realize, do you want to buy a car that's trading at 100 times PE, right? That only has more downside, right? Or do you want to trade a car company that's consistently produced profits and is now only trading at 10 PE? That's what I'm trying to get you to see. Yeah, okay, I'll get you to understand. Yeah, okay, all right, now, so there's a lot of risk, right, when you're looking at the Tesla on the downside, right, because technicians will tell you this may be a double top, right, okay, double top over here, and we're already on the down. So if this is the neckline, right, we can actually see what, 310 to 280, $30 on the downside. So 280, we see a downside all the way to 250. And looky look, 250 is exactly a resistance, a support level. Yeah, okay, so there may be a downside all the way to 250 for Tesla. And the market sells and it breaks 250, it gets worse. So if you're thinking about buying just because the stock split, right, you need to think harder. All right, okay, you really need to think harder over here. Yeah, okay, because stock split doesn't increase the value of the company. Yeah, okay, it just makes it cheaper, right, so more people can get in, right? Okay, but nothing fundamentally has changed. Right. So once again, I say I'm not against this company. Of course, other than the fact that a few trades have made me lost, right, on this stock. So I told myself I'm never going to trade this stock again. Right? No way. Yeah. Okay, but that's fine. Everybody has a stock that they will never ever trade. Yeah. All right. And for me, Tesla is definitely one of them. Yeah. All right. Now, so Facebook user, let's answer your question. All right. Let's answer your question before we end this off. All right. And yes. Facebook user, right? Why is Warren Buffett selling BYD shares in Hong Kong? I don't know, right? But what I'm trying to say was this. I didn't say BYD was good, right? I'm saying that Tesla is not #1, right? But the stock price is definitely priced as though it's the #1, right? So if it's not even #1 after fighting this hard, then where do they have to go? All right. So I'm talking more in terms of reference to Tesla with its competitor. I'm not asking you to buy BYD. I'm never going to buy any of these electric car stocks. Notice that, let me pop up the other question. Notice that when you sell puts, when it's going down, right, you lose a lot more when it goes up. Yes, it is, right? Because if you missed out the education segment, all right, okay, once again, Facebook user, I need you to approve your profile so that I know who's commenting, okay? This week, I'm going to give it a slip, right? But next week, if we cannot see your profiles, right, okay, I don't want to be harsh, okay, but I do want to know who I'm answering over here, or who's joining our sessions. Yeah, okay, all right, so I'll probably not, look up those questions, right? If I don't see a name attached to it or profile to it. Yeah, okay, this week, I'm going to let it slide. Now, so when we sell portfolio puts, this is how it works. It's not a capital gain strategy, right? But it's a cash flow strategy, right? So because it's a cash flow strategy, that means it already tells you I have limited upside. Yeah, okay, my job is to protect my downside. So when you talk about stocks, how do you really achieve a downside protection? Right? Because when stock prices go down, you lose, right? All right. So you start from the selection of your stocks. So this is where, right, sessions after sessions, I keep emphasizing, right? Choose only the strongest companies around. Choose companies with a track record of delivering profits, right? Second, if they actually pay a dividend, that's all the better, right? And third, right, they are already punished. They are already sold off, right? Why? Because if they are already sold off this hard, this far, right, there's very little sellers left, right? And if the company continues to make profits, right, short sellers will not dare to come in. All right, why? Because once a turnaround happens, they can get themselves killed. So we will have a missing of the short sellers, and we will have no more sellers because they don't want to sell anymore, or they have already sold. Right? So once a big player comes in to buy, then you see where the move is. Yeah, okay. So I hope you see how we position it. Right? It goes through a lot of thought over here, right, before we actually do so. Right now, and once again, Facebook user, right, you don't have to believe me, right? You don't have to believe me over here, but you can see our portfolio and let it do the talking. All right. So in the month of May, we delivered $2,200 in cash flow. Right. We followed suit by June, right, with another $2,200. Right. Okay. Another $2,000 in July. Right. $3,400 in August. Right. And now we are slated, right, to pocket $1,996 for the month of September. Yeah. Okay. So markets is always going to swing. That's how markets work. It goes down, it goes up, it goes down, it goes up. Right. You can't really time it to the key. Right. But how do you maintain, right, your equilibrium, right, as an investor? Because as long as you can maintain your equilibrium, you'll never cut your position short. See, a lot of people lose money is because they cannot tolerate the loss, right, or they cannot afford it, right, or they lose their equilibrium. They sell out of fear, right? So to make sure that you're going to perform well, right, you need to make sure that you fulfill all the three conditions. You never let yourself fall into those traps, right? Because I bet you, right, if you ever sold out, right, of one of those good companies, good blue chip stocks, right, amidst a market terrible sell-off, right, 6 months down the road, if you look back at the stock price, I promise you always regret it. Why? Because you sold at the bottom. You not only sold at the bottom, you sold amidst the bottom of a sell-off and the bottom in the stock. So if you're familiar with the stock, why let yourself do that? Yeah, there's no benefit at all. All right, now, so I think that puts a good end. Okay, I think that puts a good end to this week's session over here. Right, and once again, thank you very much, ladies and gentlemen, for joining me for another week, right, of portfolio cash flow. Right, $2,000 cash flow. All right, live with I'm Possible Terence over here. All right, I leave you back to your weekend. Let's see what the market wants to do by closing today. All right, do we have a good rally? Right, and that will bode well for the rest of the next week. Right, or the market is still in a mood to punish further. All right, that leaves to be seen. All right, so I'll see all of you come next Friday again. Okay, ladies and gentlemen. Bye-bye for now. See you. Good night.